Hi everyone, Tracy Amon here, sharing some more information with you about life insurance. Today we'll be talking about a type of life insurance called Index Universal Life. Hi everyone, I wanted to explain the concept of Indexed Universal Life Policy. So an Indexed Universal Life Policy addresses three main concerns. The first is if you die too soon and you haven't met your financial obligations, that's what you traditionally think of life insurance. The second is if you get sick and you can't work, you have medical bills, you need to pay your own expenses and things like that, you need income. And third is actually live too long. And what I mean by that is you've outlived your savings retirement that you have in your account. So an Index Universal Life Policy is a permanent policy. It's designed to last you from your current age to age 120. Now, I know most people won't live to be that long, but we illustrate it to age 120 to make sure it's there whenever you pass. So an IUL is an umbrella that contains two main buckets. The first is a savings bucket, and the second is actually your insurance. And so let's say you wanted $500,000 of life insurance and that costs you $250 a month. So the way it works is that that monthly premium gets added to the cash value bucket, which grows. A portion of that each month gets siphoned off to pay for the cost of insurance. In this example, $100. So if your cash value account over time has grown to $200,000, if you have an increasing death benefit, then your asset value is the combination of your cash value and the initial amount of insurance you bought, or in this case, $700,000. Now, the cash value can be used for all sorts of things. It's up to you. There's no limitation. It can be used for things like emergency funds, college savings for your children, down payment on a home, a car, or business. It can also be used for supplemental retirement income, and this is all tax-free. You don't get taxed on the gains or the distributions. It's in the same family of like a Roth IRA. A cash value account is indexed. It follows an index strategy, and what I mean by that is the money that's in the cash value, the interest that's credited to that account follows the stock market index, but your money is not actually in the market. And so with that, you have a cap of, let's say, 12%, which is the most you can earn in any 1 year. And then you have a floor of 0, which means you never lose money if the stock market doesn't perform well. The insurance death benefit can be also used if you are not able to work. And if you come down with a terminal illness, chronic illness, or critical injury or illness, you can use the death benefit to pay for those expenses. Typically, if you have a monthly stipend, it's about 2% of the death benefit each month, or in this example, $10,000 a month that can be used to pay for long-term care, income replacement, and what have you. It being a universal life policy means your payments are flexible. You can pay anywhere between a minimum and a maximum. In this case, the minimum covers the cost of insurance. A target gives you some cash value growth, and then the maximum. This life insurance policies have a tax advantage, and so the IRS puts a limit on how much you can put into that. In this example, the minimum is 100 to cover the cost of insurance. The target is some value above the minimum so that you add some cash to the cash value. And then in this example, $1,000 a month could be your monthly maximum. So whenever you're doing well, you can add more money into this life insurance policy. When you're not doing so well, maybe you have some unintended expenses, you can ratchet that back down to something that's more amenable to your budget. Or if you have significant amount of money in the cash value, maybe you don't have to pay anything for some time. So it addresses these three main concerns. Die too soon, you have a life insurance benefit. Get sick and you can't work, you have living benefits. And then if you live too long and you've exhausted your primary retirement account, you now have funds in your cash value for a supplemental retirement. Thank you for watching. If you have any questions, you can email me at info@amalagency.com.